Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Pederson. So today I have with me Tyler Deveraux with MF Capital Partners. How you doing, Tyler?
Hey, doing good, Lance. Thanks for having me on. I appreciate it.
Yeah, my pleasure, man. My pleasure. Looking forward to it. So we usually start off kind of easy stuff before we get into all the risk and get in the weeds here. But maybe you can share with us just a bit about how you got into the biz. You know, how'd you get into real estate? And I always like kind of that origin story that, you know, gets us from when you got into it, you know, up to what made you decide to kind of launch your own firm and that sort of thing.
Yeah, man, for sure. You know, growing up, just grew up. My mom was a single mom, raised 4 kids, and just, you know, we definitely had our fair share of struggles. But that just made me, more than anything, it just made me super, super curious about wealth. You know, and I would ask questions to people all the time, man, of what they would do, you know, what they're doing, right? Started my first business at 16. I cleaned people's blinds, great little business. But then, you know, moved off, went to college for a little bit, and got this job that was I looked at this as my light at the end of the tunnel type job, you know, making enough to pay bills. That was great. I was going to buy my first property. That was also awesome. But then I got laid off from that job. And that was just an eye-opener to me on so many different levels, you know. So what I decided to do is I decided to drop out of school. I decided to still buy that property because I, you know, didn't have a lot of money. I was hoping that people could, I don't know, essentially pay me rent instead of me having to pay rent to other people.
Yeah.
And then I was going to start a business, man. I'd done it in the past, wanted to do it again. And I started a web design, web hosting business. That didn't make money for like 6 months. And so that was a tough time. But what I realized during that time was this real estate, this property that I bought, and these tenants that I have in there paying me rent, dude, they were paying my bills. And I realized passive income and how powerful that could be. And just started, you know, eventually that web business took off, and I started to buy some more properties here and there. But Lance, I had no idea what I was doing, man. Like, I had no clue. I was just buying properties. People told me that I should. This is back in the day when you just needed a freaking pulse to get approved for a loan. Totally. So I didn't know what I was doing. You know, 08, 09 came. I got freaking lamb blasted. By 08, 09, lost some properties. Definitely, you know, left with some battle wounds. But it's also like, but once again, that was probably one of the biggest blessings for me, because that's when I realized, like, that wasn't real estate's fault. That was my fault. Like, that was my fault as an investor, as an operator. Like, I had no idea what I was doing. You know, I mean, dude, the name of your podcast is the Real Estate Risk Report. Man, real estate is a risk. It's our job as investors, as operators, to learn and understand how to mitigate it. So I started getting trained, man. Started getting trained on how to acquire single-family properties. That was huge for me to kind of understand strategies behind it. But I'll tell you, my biggest, you know, motivator is time. It's been I call it my definite major purpose. Like, time with family, time to do the things that I want to do, you know, time to give back to my community. And single family homes was just a grind for me. I just saw that as a never ending grind. But I didn't know any other option, you know. So the longer answer, but the shorter answer, I guess, to your question, how did I get into launching my, you know, multifamily investment firm? I ran into an old contact of mine in the airport. His name's Ryan Woolley. This is probably 6-7 years ago now, not that long ago. And he told me he had just learned how to acquire apartments, which was mind-blowing to me. Like, I had no idea. I was a pretty seasoned investor, but I had no idea what syndications were. I had no idea how to structure those, even to passively invest in those. No clue. And then started getting trained in that, man. Ryan Woolley's now my partner in, you know, he's the co-founder of Multifamily Capital Partners. We also have an education company called the Multifamily Mindset that he's the co-founder of. And we took off, man. We now own just under 2,000 units. I think it's like 125 million in assets. And I'm very grateful for everything that I've learned and that I continue to learn along the journey. So.
Yeah, no doubt about it. It is interesting that, when markets are going gangbusters, like you said, when you got into it back in the early 2000s before the crash, right? I mean, it's hard when everything sort of is just working, and it's hard to figure out like really where that resistance is, because it just seems like you said, you just buy properties and boom, it just works out, and you got a pulse, and and I think we really learned this too when the pandemic hit, is that I find that it's really easier to learn things when things are broken, right? So when something breaks and you start to see, I mean, especially with, capital markets or just, the economy, I guess economies in general, right, is that when it's broken, it allows you to start to see the cause and effect of like, well, when this happens, then that causes that to happen. And then all of a sudden, like we're seeing right now, to some degree, I mean, obviously besides the Fed just, printing money like crazy, but you see things like, all the supply chain issues we have now. I mean, and then it's exacerbated by like Suez Canal or whatever. And you start to see then all of a sudden, boom, lumber prices are up. And then, all these different things, because when it's working and humming, it's hard to sometimes to figure out like, how in the world does all this stuff work? But when it breaks, then all of a sudden you're like, oh yeah, that makes a lot more sense now. Right. And so it's one of those things where, I mean, you can read books till you're blue in the face. And obviously I'm a huge proponent like you, like of education, but, and you mentioned it, like you earned your keep, or you earned your stripes, or, you walk with a limp after that 2008 thing. And same with me. It's just, sometimes, man, it's the experience. You have to take your lumps. And being an entrepreneur, we have similar journeys in that regard. Same thing. Like I'm like, oh, fell in IT. Like, oh, I'll just start an IT company, and we'll just do that. And I don't know what I'm doing, and you kind of learn along the way. But it really is. It's just you got education and experience, and of course, you're always trying to balance those things. And as you get older, of course, your ability to avoid mistakes or to surround yourself with those who've experienced them, and have wise counselors and all that sort of stuff. And that's why we do this show, right? I just think that it's good for those who are trying to learn to hear from guys and gals who've done it, and live to tell about it, so to speak. So yeah. I think it's great. And I always love hearing that story about, especially with everyone kind of starts with single family, makes sense, and the fact that the multifamily thing is like this mind-blowing, like, oh my gosh, you mean I can buy 100 or 150 of these things at one time, and like oh my gosh, and then I can get other people's money to do it? Like, this is great.
Totally. It baffled me that I had no idea. Once again, in most people's minds, I was a pretty seasoned investor, but I didn't know it was possible. And you think about risk, and single family is it's one of the riskiest assets out there. It's because when you have one single tenant and that tenant vacates. Here's the problem. Most people will. Well, first off, you have a single tenant and that tenant vacates. I mean, dude, you're now paying the mortgage. You're paying everything out of your pocket, and it could be they're gone for 1 month. It takes you a month to get a new tenant in. Shit, dude, that could be your whole profit for the year on a single family property. Totally. So one way to mitigate risk, I realized, is bigger properties. But where people struggle to wrap their head around it is they try to make these investment decisions on what they individually can afford. Well, let me tell you why that's risky. Because if you individually can afford it, and that is how you're making your decision, well, okay, then when there is a correction, guess what happens? Let's say that you lose some of your income. Let's say that you lose your job. Let's say something like that happens. And let's say something like that happens to your tenant as well. Okay, well, now that tenant vacates, now you lost your job too. Now you lose your property that was producing some income because you made investment decisions on the wrong things. We need to make our investment decisions not based off of what we can afford, but what makes most investment sense. That's why syndications are huge. On a single family space, and I get on these rants sometimes. You interrupt me anytime. But the single family space, there's not a huge difference between world-class operators and mom-and-pop operators. There's just not. But a multifamily property, a syndication, it runs like a true operating business, and there is a difference between best-in-class operators and somebody who's onesie-twosie coming in trying to figure it out.
Yeah, most definitely. Yeah, I think you're right, and I think that's where it's inefficient, right? And like you said, you could have and we've seen that through the, after that last downturn when the institutional investors became, they went and bought all those single family properties. That really was unprecedented. That's not how it worked before. Institutional investors actually didn't hold single family rentals. And I mean, and now they do, and they're seeing that, I mean, they do okay at it, but to your point, the guy with or gal with, eight single family homes and whatever the performance they're squeezing out of them isn't that much different than, one of these giant, institutional investors that have, 300,000, doors or whatever crazy thing it is, right? Like it's tough because that economies of scale is hard. And not to mention, you hear from the tenants of many of those institutional landlords, it's just a nightmare, right? Like it's just an absolute nightmare. Now of course you're seeing with like the build to rent stuff, they're all over that. They think that's freaking awesome too. So, which I think is great, obviously for guys, our peers, Tyler, that are the guys who are actually, tilting those things up. And there's, it's always good to have an exit strategy, right? So when there's someone who's willing to, if you go in, like you said, you'd buy from a mom and pop landlord of a 100-unit apartment complex or apartment community, and you basically it's mismanaged, and you drive NOI and improve, you get higher rent and you reduce expenses, and then you can turn around and sell it to some Wall Street firm, or whatever. I mean, that's the beauty of it, right? Take the money off the table, and that's what makes real estate great. So it is an operating business. It's execution driven, and which I think is a good segue. I mean, for you guys, like, what is sort of your buy box, or what are you guys looking for? Have you found a sweet spot in terms of like number of doors and markets that you're real bullish on, and that kind of thing?
Yeah, for sure. And markets change, investment strategies change as the market changes, right? Yeah. I look at market cycles. I was trained by a guy named Dave Lindahl, and he has a book called Emerging Real Estate Markets. And he talks about market cycles and the different stages and the different strategies there. And at any given point, there's these metro areas that are in different stages of the market cycle, and your strategies are going to be different. But I'm going to circle back real quick to your comment, because it's so true with an exit strategy. I think one of the biggest mistakes that not just investors make, but business owners make, is not knowing what the exit strategy is. Because I'll tell you what an exit strategy does. What an exit strategy does is it allows you to make these business decisions in line with the exit strategy so that you maximize your exit strategy. There's a lot of money to be made on the sale of a property if you handle it correctly. And so the decisions that you're making need to be in line with this purpose, this exit strategy on a property. And it's one of the first, as a passive investor, I have a whole bunch of money passively invested in properties. I'm obviously an operator as well, but I believe in real estate and multifamily as a whole. And one of the first questions that I ask, if I'm investing passively, is this, and this is a takeaway for some of your investors, because we talk about scars. Lance, I have passive investing scars as well. Being an operator has made me a better passive investor. Being a passive investor has made me a better operator. And one of the first couple questions that I ask is, number one, what's the biggest risk? Because there's always risks. And how they answer that question is very telling to me. And number two is, what's your exit strategy? Because I sincerely believe that if they don't understand what the exit strategy is, then they don't understand how to carry out the business plan to maximize the exit, right? So to your question of what we focus on, though, we focus on, I'll say 100+ unit deals, but I mean the last acquisition that we just acquired was 46 units, and there's reason behind it, right? And I'll maybe explain that in a second. But if you were to ask me what my bread and butter is, 100+ units, B, C class, but we try to stick primarily with B class projects, usually 90s vintage or newer. Value add type properties, and our, even to pinpoint that even more, is these operational inefficiencies that we're trying to identify, right? Things that the current operators are failing to do or see. And I can give you some examples of those once again if you want me to get into some more details there.
No, love that. Yeah, that's the good stuff right there.
Okay, so give you an example. We acquired a 138 unit property. It's called Charbonneau. We actually rebranded it it's called Tropical Ridge now, but it was called Charbonneau Apartments. It's in Columbia, South Carolina, just outside of downtown. And this property was, we talk about risk, right? We put this property under contract in, I think it was like June or July. I think it was July of 2020. That's the height of uncertainty with the coronavirus. People aren't sure what's going on, but man, there's always going to be uncertainty. There's always going to be a risk. The key is, how are you mitigating those risks? Okay, so I'll get into some details here. Operational inefficiencies on this property. These owners had owned the property for 3 years. And right after they took over, they had a fire. It used to be 150 units. Now it's 138. That's because a 12-unit building burned down. Well, that's because they went into the property, first off, undercapitalized and underinsured, which those two things, mitigating risk, those are two ways to mitigate risk. First off, always overraise. You're always going to need more money than you initially think. And number two, you never skimp on insurance. Well, they did. And so what happens? Undercapitalized, underinsured. They aren't able to rebuild this property, this building. That burnt down. One of their, I guess the owner, partner. I guess that this is kind of sad, but the partner that handled their multifamily assets had passed away, and now these other owners partners didn't quite know what to do. So operational inefficiencies. First, fear. They were fearful that if they started raising rents or charging for utilities, that these tenants would vacate. So their strategy, literally, Lance, was to retain tenants by keeping low rents and keeping a tight grip on cash flow. Well, man, these properties, that's how they're valued. They're valued off of income. And so there's, operational inefficiencies there. For example, low rents, for sure. They weren't charging for utilities, which means we call that an all bills paid property where the owner is paying for all the utilities. That's an easy switch. And what we found is that tenants they're very willing to pay for their own utilities. And, for your listeners who don't understand what that does, that means our expenses on the operations side go down, which means our overall income goes up. And what we found is they're willing to pay for those utilities if you provide a nice quality product, nice interiors, amenities that are in there. Well, man, they have, in these apartments, they had, first off, even on the grounds, they had a pool, beautiful pool overlooking this quarry lake but the pool was inoperable. They hadn't taken the cash to renovate the pool. I mean, it's just crazy to me. They have, even just the landscaping on the property, it's a total mess. It just looked trashy when you come on, but it's a beautiful property. We come in, we can fix those things immediately, increase the interiors, turn the interiors to a premium product, maybe overspray the countertops, sand down the cupboards and repaint them, put some new hardware on, carpet or, in the bedrooms and, wood laminate or vinyl plank flooring in the kitchens and the living areas. And all of a sudden now we're able to not only maximize rents, but we're able to now charge also for utilities because they have a premium product, a nice product that they are excited to live in, and we capitalize off of all those things.
Yeah, exactly. And that's just it. It's like the undercapitalized thing is a big one. It's hard to fix that. You don't have enough money and you can't do things, and they're just sitting ducks for guys like you going in because it's like they can't get out of that. I mean, what are they going to, that it's tough, right? And so, looking for that. And you do see, people are trying to, it's one of the things that I don't know if a lot of people do look at, like passive investors, just go and look at how much is going to go into CapEx reserves. Pay attention to that, because if it's super skinny, it's like just nip and tuck. You don't, and I think most guys know what they're doing, obviously, but the worst thing for an LP is to have, some capital call, and I've heard it happen. It does happen, 6 months, 9 months, 12 months down the road, like, oh, we screwed up, we don't have enough. And then the other one too, I'm glad, that's that insurance side. I mean, that's a big no-no. I mean, fires happen, man. I mean, it's, I don't know as you know, being in the business, I mean, it happens more than you'd think. And it's just a thing. And and it's hard enough, even when you have a lot in the right amount of insurance, it's a pain in the rear. I mean, it takes freaking time to get those guys to pay out those claims. And I mean, it's a total bummer. I mean, when you have a fire, it's a setback, but it's hard you can only do so much about that. Things happen. Going back to it's just a risk that exists. So
fire is a risk of any physical structure, and the easiest way to mitigate that risk is, number one, that's good insurance, man. But then number two is actually caring, I mean, literally caring about the tenants. It's funny, around the same time I had somebody send me a question. It was something along the lines of how are you going to take care of tenant needs or take care of tenants without sacrificing the bottom line to investors? Something along those lines. I don't believe it's a zero-sum game, man. I believe that if you care and if you take care of tenants, the bottom line always benefits. And I'll give you this example. Not only did they not rebuild that other building, that's a decision that they can make or not make, but I'll tell you what, they didn't clean it up. So you have this burnt down building, rubble. Dude, that's a traumatic experience for these tenants, whether you lived in the building or not. It's traumatic. And every day these tenants have to come in and for 3 years, Lance, have to see this burnt down building. You don't care about your tenants if you allow that to happen. You don't. Right. I'll give you, a flip side story of that. We had I've had fires at properties before multiple times, but I had never had a fire on a property where an entire building burnt down until April of 2020, man. That happened to me. I had a property out in Denton, Texas, and we had a fire. I wake up in the morning and I have phone calls from my, I wake up, from a phone call from my property manager saying that there's a fire. There's been a fire at our property. Well, okay, we're talking about the difference here, and this is I don't believe that I deserve the credit for this kind of stuff. This is stuff that I have learned from other mentors, other people who have trained me, which is once again, it's a way to mitigate your risk, which was how to handle fires, man. And I knew who to turn to in that time too. We had a mentor of mine who had a big fire like that just a few months prior. So I immediately called, got reminded of what they did. And then we sprung into action, man. We had our property management our company on site with all the employees to be able to make sure that the whole building burnt down. Is an 8-unit building that burnt down. Make sure that it was all, fenced off, make sure that we had a tarp over there, make sure that tenants are being taken care of. We reached out to the church next door, let them know that our tenants had, that we just had a fire. They reached out to their congregation. Their congregation comes in and starts bringing donations to the tenants. We call Red Cross. They come on site giving cash vouchers, housing vouchers, make sure that these tenants have a place to stay, while our staff that we also have on site is turning our vacant units to make sure that we can get these tenants back into a unit within the next couple days. They're in there. This spreads out to the community. Community starts donating more goods. My partner Ryan has a mattress company. He reaches out to his contacts and starts donating mattresses to the tenants. And all of a sudden, these tenants are taken care of. They feel taken care of. They feel like, this sense of community, this sense of belonging. And it benefits them. Every single one of them ended up with more than what they lost. But I'll tell you what happens there. Some people would look at that as a loss because the mattresses, we paid for those things out of our own pocket as operators. Why? Because it's the right thing to do, man. It's the right thing to do. But here's what happened. Those tenants rally and the community builds and the environment is better. And now all of a sudden we build this, because we have insurance once again, the community's better, tenants are better. They want to renew because they see that we care. We are able to build, the building back up, get rents the whole time. It's mitigating risk, man. And it's all about, that's just experience. So.
Yeah, I agree, Tyler. We had, a whole series of that talking about, especially, in multifamily, because these are, especially when you're doing kind of more of the workforce housing stuff, the Class B, Class C sort of things. These are your firemen and your nurses and your, these are the people that serve us, right? We would be, this country would not be what this country is without those people. But the thing that, it was JP Newman with Thrive and his partner Adrian, pointing out, it's just that, 42% of Americans are, they can't even withstand a $500, emergency, like that's how, like they're on that tipping point, right? And a lot of guys like you, multifamily syndicators, that's really often where your bread and butter is in that sort of, right there, right? And so those people who are, making those $900 rent checks to make all this happen, that's who those people are, right? And so, and to the guy who asked the question, one of your students or whatever, right, who's like, well, how do you balance these things? It's like, dude, it's a no-brainer, like you said, because it's a community of people. They all share walls. They're right next to each other. Most of them are all in the same sort of situation at any given time. Someone's struggling and barely hanging on, especially in the last 12 months. And it's been tough, 15 months for this whole country and the whole world. So, but when you do, you show that you care as owners, right? And things like that happen. Those aren't good things, but then they start to see that you do care. And they start to work with each other. And now they're a part of a community. And people, guess what happens when you become a part of and belong to something? You generally don't want to leave. Yep. And that means that you're gonna pay your rent. And if you cleaned up the landscaping and they can swim in the darn pool, and you rebuilt the building that burned down, and you do those things, and now all of a sudden they're like, well, I'm not leaving. So now instead of like bailing after 12 months, so you have to turn it, which is not cheap. They're going to stay for, renew another year and another year. Now that tenant's been in there for 4 years, you're making money. Like any investment you make in the community of that kind of outreach or whatever it is that you're doing, it's going to triple whatever it costs, you're going to triple it. Right. But
what you just said is key, by the way. I want to point this out. What you just said, I'm telling you, Lance, is more valuable than I think most people listening are going to take away. And I want to pinpoint and drill down that point one more time, man, because you said if they feel like they belong and they have that sense of community, they're not going to want to leave. Okay, the number one reason that people do leave, that they don't renew, it's not rents. It's not rents, man. It's not handling maintenance requests. It's thinking that, which makes them feel like you do not care, and they will roll. Yeah. The number one reason that people stay or renew is a sense of belonging, a sense of community. And so far too many operators don't take that into account, and they don't think of those things when they're trying to mitigate risk as far as building a community. So I want to drill down. What you just said, Lance, is key to making sure that people renew. It's taking care of tenants. And what you said was when they renew, that means you don't have to turn that unit, which means your costs go down. You still bump rent. That doesn't mean you don't bump rent. You still can bump rent, but it's going to be less of a rent bump than a new tenant coming in, because if a new tenant comes in, I'm going to have to once again turn it, and I have to bump it back up to to market, and that's how we mitigate risk there too. But taking care of tenants, Lance, I love that you said that, man. So many people don't get that. That's how you take care of them, and take care of investors.
They do, yeah. That's right, and I think that's. And it's funny because even if all these guys could listen to what you and I just said, and 75% of them be like, that's hogwash. Like they're not gonna internalize, they're not gonna do anything with it. So as a passive investor, I think that, because what my sense is in dealing with a lot of passive investors is that, one, I feel like, they definitely shift into this analytical brain, but then their own experience more often than not is that they're not, they focus on a lot of the wrong things, right? And I'm trying to tell them, like, listen, you know what? You got to figure out who these guys are. To your point, when you ask them, what is the exit strategy? Do they have a good answer, right? Like, it's what's the business plan, and there's a method to madness, stuff like that. But it's digging deeper into these things. That's how you can tell whether these people know what they're doing or not. It's having conversations like this about what their philosophy is on how they're going to manage it. Because the reason, like you said, these tenants and residents are, moving out is that they do feel like they're not being heard and that it's very extractive, right? Like they feel like you guys came in, you bought this joint. Yeah, you did a few things, right? Kind of contrived, but then all you want is you're just, they feel like you're just trying to drive them out, right? Like you're just trying to suck more out of me, right? And so, I mean, that's that balance. And, I get it. Okay. We're not talking, these aren't self-storage units. Like, okay, maybe in self-storage, like you can get away with that because it's just, there's the human, the human
element isn't there.
The human element isn't there, but we're talking about like, these are places where people live, or even like mobile home parks is another one. I'm going like, everyone's like, oh, it's just the greatest thing in the world. I'm like, dude, that's tough sledding. Mobile home parks are even harder than apartment buildings. Right. I mean, like it's a different animal. Like these people own these places. They're very like it's tough. So, yeah, the rewards can be really good. But, if you're not good at these sorts of things that like you and your team's doing, I think that's a big differentiator. And then, of course, if they don't say things like that as risk mitigation techniques, because all the guys I've interviewed on this show and all the people I've talked to a person, you can tell those are the things that they're bringing up. Like we want to make sure that we infuse a good culture in the community. We want to make sure that we reply quickly to their maintenance requests. That's the stuff they talk about. They're not talking about like, I don't know, maybe they'll talk about water. Like, hey, how can we save water costs or something? But
sure.
It's usually
we do all
not
those things too. Those are important too.
Yeah, those are important things, but.
Well, listen, I love it because, yeah, man, I'm not gonna lie. I just blanked just a second on what I was gonna say, but you had mentioned something with, gosh dang it, I totally just blanked, man, on what I was gonna say. I wanted to pinpoint on one thing that you just mentioned. I think it was housing, and this is what it was. Housing and taking care of people and their budgets, and that they don't have, they have $500 is gonna, throw them totally off kilter. Well, okay.
Yeah.
Bring that back full circle once again with coronavirus. Our portfolio is actually performing better year over year, meaning it performed better in 2020 than it did 2019. But I'll tell you, it was more work in 2020 than it was 2019. And you want to know why? It's because you have to get creative. So showing tenants that you care. Okay, well, we've had an eviction moratorium, right? We can't evict. You still sometimes need to find creative ways to get tenants out. And I'll show you how we do that. But first off, like if somebody runs into a hard time, Lance, I want to figure out a creative way to help them be able to pay their rent instead of just there's two ways to handle that. Somebody, the whole freaking country shuts down and people don't have money to pay their rent. Well, there's two ways to cover that. Number one, you play a victim as an operator, which is, well, shit, there's nothing else I can do. It's Corona. This ain't my fault. It's freaking COVID's fault, man. What am I gonna do? That victim-based mentality. But then there's also this ownership mentality, taking ownership and getting creative. And there's tons of resources for these tenants. There has been and still are tons of resources. But do you know what? What they hear on Facebook or wherever they're at, their friends, their people they hang out with is, hey, you don't have to pay your rent. Dude, there's an eviction moratorium. Government says you don't have to pay your rent. Well, yeah, you do. Yes, you do. If you don't pay your rent, you're still liable for that rent. It's still going to be a debt to you. It's still going to hurt you if you don't pay. And tenants also know, whether they, consciously or not, they know that if they do not pay their rent, the place where they live next is not going to be as nice as the place they live currently. They know that. But here's the thing: give them solutions. Like on one of our properties, and this was not my idea. This was my partner's idea. This is Ryan's idea. He had this idea to bring on a social worker on site to help these tenants apply for government things to be able to help them pay their rent, right? Because if you've ever applied for anything through the government, it is a pain in the ass. So we bring on a social worker to help them apply for those kind of things so that they can then pay their rents. That's an easier way to mitigate it, right? The other way is, you also have tenants in there sometimes that can't pay their rent, man. They can't pay their rent. Even with some government stuff, they can't pay it. And we have to get those people out. Or there are some people that just refuse to pay it, right? We have to get those people out. Well, if we have an eviction moratorium where we can't evict, That doesn't mean you can't get those bad tenants out. You just have to really appeal to human needs once again. And this is one of the things that one of my mentors taught me, that actually multiple of my mentors, but my first mentor in the multifamily space, his name was Jeremy. And I learned so much from this dude, and he helped me understand, like, you have to understand the needs of people. Like, and if you go in, so many people will go in and just try to offer cash for keys or offer whatever to get these people out. But dude, you don't go in offering something out the gates. You're the takeaway for your listeners is you go in and you ask them what the situation is. You ask questions and you listen to what the problem is, and then you come up with solutions to solve their problem. You're not just offering something willy-nilly. You're going in and you're listening, which one of the things that you had mentioned is that tenants don't feel like they're being listened to. It's a rare strategy, man. You go in and you listen. Yeah. You then provide solutions that are going to benefit both parties. They are going to move, which means you can now rent that to somebody that is going to pay the rent, but they're also going to feel taken care of, man, because you solved a problem. And most of the time, if you take that approach, it's going to cost you less financially and mentally than if you were to just go in firing off the hip with solutions, cash for keys, whatever.
Yeah. So Tyler, how do you, like for you guys, I mean, you've got a big portfolio now and growing. How do you deal with that though? Because a lot of the stuff we're talking about, like, yeah, I can see like guys like you or I mean, like we heard these strategies, we know them, you go in, right? But that's not you doing it, right? It's this delegation. And I mean, do you guys have your own property management firms, or do you use third parties, or like how do you deal with that to kind of ensure that the properties are being managed at the ground level the way that you want them to be?
Great question, man. Seriously, that is a phenomenal question, and I'm glad you pointed it out, because it's not us, and when I say that 2020 has been more work, it's because of everything that you just said. You have to train, you have to continually train, but we didn't start training in 2020. We are always training, and I'll give you this example because it starts from the top down. I actually call it the leniency cycle, right? Of what happens is when, as owners, if you haven't trained your tenants to pay their rent and make sure that they know that paying rent is a priority, they're not going to. They're not going to pay the rent. They're going to ask for forbearance on their rent leniency on their rent. But man, we have been trained, and that really comes from the top down, from operators to property management company to now to tenants. But what we have to do, we have to keep the property management companies honest and follow up with what is happening, right? And set parameters. And I'll give you a couple examples of this. Well, I'll give you this example even non-real estate related real quick, because my kids, I have two kids, okay? Pax and Marley. They're 6 and 4. They're the cutest little kids in the world. In fact, Marley just sent me to work today with this little painting she made. It's freaking best.
Look at that.
Well, listen, they wake up. I'm early. It's the best. I wake up early, but they started waking up early, really early, man. They were starting to wake up even sometimes before 6 a.m. And dude, that's a no-go. That ruins the whole day for them and for us. And so we got this clock. I think it's called like Mela or Nella, and it's this clock that lights up. It turns green at 7 o'clock when they can come out. It turns green. Well, when we first got that clock, Lance, they would still come out. And I'll tell you, as a dad, what I really want to do is just grab that little girl or that little dude and cuddle him on the couch. But I know that is not what's best in the long term. So what do? I lovingly and gently bring them back into the room and make sure that they don't leave until 7. Well, now because we did that, right, because we sacrificed in the short term, now long term, they do not leave their bedroom until 7 o'clock, until that light turns green. And if they'll even wake up, they'll just play in the room before they come out, because we've set it from the top down. Handling kids or employees is no different than handling property management companies and how they handle tenants. We set parameters, right? We set expectations, we set systems in place, and then we hold the property management company accountable. And when you do that, the property management company holds the tenants accountable. So we track numbers. When we take over a property, we have a weekly call with the property management company. If the property is struggling, we have a weekly call. But I always get a weekly report with specific metrics that we're looking at. How many tenants came into the property? How many of those tenants, signed filled out an application? And how many tenants have paid their rent by specific times? And we hold them accountable. If 90% of the rents aren't in by the 15th, you better believe that we are on the property management company's ass, not reaming them, not yelling at them, but getting solution-based with them, because they have to know it's a priority. But if we're not doing that, right, if we're not asking those questions, then guess what they do? They become lenient because we're lenient with them. Now they become lenient with the tenants, and the tenants become lenient with paying their rents. So it is systems, processes in place to keep them on track. Full circle, though. So we had those things in place on really all of our properties, all of the portfolio that we had, except for one, because one of the properties we acquired right before coronavirus happened, and so we hadn't had time to train the tenants and make sure that they're on top of those things, and that one is the same property that we had the fire at. So those are two things, man, those two things right there could make a property go south, period.
Yep.
But it is the number one, factor in deal performance are the operators and their willingness to solve problems, to get creative in solving problems. And we've obviously, I bullet pointed a couple ways how we've been able to do that. And that's why that property is doing great. And we're actually getting ready to sell it now for a healthy profit.
Yeah, I think that's a great little tidbit there, because sometimes what I hear, right, is people who aren't doing their own property management, they'll say things like, well, we always hire best-in-class property managers in the given city. So the way that I interpret what they're saying is they go hire who they think is the best property manager in the given city, and they basically abdicate they more or less are abdicating how the property gets managed to them.
Yep.
And my hunch is that's probably not too far off. I'm sure they'd be offended that I would say that, but I think that what you're saying is, okay, yeah, we use third-party property managers. Yeah, we tried to find best in class, of course, but we're not going to take a chance on that, right? And that's why I love using the sort of analogy to children, because those of us who are parents, I, the father of 5, completely understand what you're saying.
Better than anybody.
Yeah. But it's so true, right? And it's even like a puppy or whatever. Like anything, it doesn't matter. It's that you can't just sit back, and if you just let people do whatever they're going to do, or employees or whatever, they'll do whatever they want to do. Right. And so that's how it works. And I guess, but see, I've never heard anyone put it that way when it comes to property managers. They sort of deem them either good or bad. There's good ones or there's bad ones. And I think what I hear you saying is, not really. They're, they could be all over and run the gamut in between those two extremes. But ultimately, you guys are always going to say, okay, we've hired you guys to do a job, right? And we're going to make sure that you do things the way we want them done. And we're going to take corrective action to make sure that that's drilled into you as to how we want it. Now, you can feel free to manage everyone else's properties however you feel, whatever you feel like doing, but not ours, right?
You know what's interesting is when you truly take, and yes, you nailed that, but when you truly take that approach, it is a sacrifice in the short term to do that, because it is, man, it can be uncomfortable sometimes. I'll give you an example on one of the properties we had where, most property managers, they have the best of intentions, man. They don't want to be crappy managers, but most people, not just property managers, most people, period, don't understand some of the things that they do that affects their performance as a parent, as a property management company, as a whatever. An example of this, we were on site for one of our site visits, and we heard the manager, the owner of the management company talking to our on-site manager negatively about a couple tenants in the property. Now, listen, you have troubled tenants. That's a given. That is going to happen with this business. But how you talk about tenants is also going to be it's going to show. It's going to show. And they would never call them by name. I noticed as I'm listening to this, they never called them by name. There's always some slang or something like, oh, so-and-so with the, weird haircut, or so-and-so that, has the messy front porch, or that's how they identify them, Yeah. Well, most people, I'm going to tell you, most people would, first up, most people probably wouldn't even recognize the impact that's going to now carry over into performance. But once again, man, I've surrounded myself with mentors that I'm so grateful for. One of those, Lance, I have a mental skills coach. His name is Dallas Pruitt, and I work with Dallas Pruitt all the time. And what he does is help me identify these little things that carry over into performance. And one of those is how we talk, the things we say, how powerful words are. And I'll tell you what we did. And this is before I even kicked into gear. Once again, Ryan Woolley, he's better at every aspect of this business than I am. And we carry the same values, which is, do we care about tenants, man? We want to take care of them. And so we don't let that slide and strategize. Should we talk about later? How should we, soften our approach? We immediately address an issue when it's brought up and say, hey, first off, that's, looking at the rent roll, their name is John and Kathy. And this is, whatever their names are. And listen, man, we don't say those types of things about tenants, because if you do, when they come in, guess what energy is going to be there? Negative energy. And that is going to, once again, carry on over into everything. But addressing that, Lance, is uncomfortable as hell. It's uncomfortable. Yep. But you do that a couple times, and then guess what they become very aware of? How they're talking, what they're doing, how they're treating people.
Totally. Yeah, no, it's great stuff. This is like all like little nuggets and tidbits, and this is But yeah, I'm a huge believer in it too, man. Like, I think that all of those things, it's all the little things that make a difference. There isn't one thing, but it is about, how you handle these sorts of situations, and it makes a difference. And I think that that's what's important. I always try to get across, like, everyone in the investment game. Even like with, the public equities, markets, momentum trading and all this stuff. I can't get behind it. Like, it doesn't make sense. I get it that you could do that. Like, you could buy and sell based upon how things are happening. But for me, like, I'm a fundamentals guy, right? Like, a value investor. It just, it's sort of like, I want to know, like, who's running that company. It's more of like what Warren Buffett says. Like, that just makes more sense to me, that you could have Rite Aid and Walgreens, ostensibly the same kinds of businesses, one's on one corner, one's on the other corner. But I guess for me, what matters is who's running the joint, right? And how they go about doing what they're doing does seem to me to make a difference in, who's going to outperform the next guy, right? And then ultimately it's looking at those things, and those things will translate into results, right? It's been hard because I think on this run up, obviously it was great for everybody. It was just this crazy bull run that's continued even despite, COVID. But a lot of people who really didn't know what they were doing made a ton of money, and good for them, right? And good for whoever their LPs were and investors were. But it's just, I think that who knows what's going to happen here, but I just assume that, as you talked about, these market cycle and it's going to happen. And I just think that if you want to get in this game as a passive investor, you need to understand that, picking the jockey is more important than picking the horse. Like, the jockey matters, right? In this case, that who's the operator really makes a difference. And it's these little things that, like you've been talking about, Tyler, those are little things you want to look for, like, not just the stock, like, I do this and I do that. And it's like, yeah, but how do you really do it? Do you have conviction, right? Like, is there, because that's what you guys have. I can just tell, like, they'll give you examples that you can't give examples of things if you don't have convictions about things. Let me tell you about this one time this happened, right? Like, otherwise those guys are like, I don't have no conviction. My conviction is, like, how do I, we just sent out a letter telling people that we're increasing rents $100 or, I don't know. It's not, that's not conviction. So this is great stuff, man. Well, how can people find you? Like where should they go to learn more about what you guys are up to?
Social media is probably the easiest, and my personal social media connects to all the other ones. So Tyler Deveraux. Yeah. Last name's spelled a little different though, so it's Deveraux. So Tyler Deveraux, Facebook, Twitter, Instagram, whatever. I'm LinkedIn. I'm on all those things. So would love to connect and answer questions and direct any way. And I appreciate you saying the conviction part, because I am obsessed with growth, and hearing you say that it makes me. It's grateful that that's what you see, because I believe that. Yeah, and this might be, I don't know, shocking, because I feel like as we've talked about it, I can see how some of this stuff could come prideful, because we've been talking about all these things that people do wrong and what we can do right. But I'll tell you where I learned that, Lance, was from other people, man. Other people, mentors. I've even learned from passive investors. Like passive investors will ask a question, and listen, man, if I don't know the answer, or I haven't thought about that, I'm not going to try to pretend like I have already thought about it and I know the answer. I'm going to be like, shit, dude, it's a great point. I don't know. And that has allowed me to learn and grow a lot. And that's, I'm grateful for that more than anything. So anyway, appreciate you saying that. It means a lot to me.
Yeah. Hey man, it's not hard to pick out. I mean, it's a growth mindset, right? It's all about mindset. And, we share the examples, like it's good stuff. It's just, it's talking about like, the reason why you do it is what matters. Right. And I think that you guys are clearly, you've got a commitment to excellence. You feel like you can do better, and there's always, but it's centered in just, who are the humans. So, I mean, to me, like, I feel like those are the things, right? Like that's the conviction. It's coming from a place of you've got purpose or reasons why you do what you do. And the good news, of course, is that the investors are going to make money. You guys are going to make money. The tenants have a great place to live. They feel good about where they live. I mean, it just seems like if you're going to be in the multifamily business, it just seems like that's kind of that's how you should view it. Now, it's not the case with everybody. I think some people are extractive. It's all about making money. They could really care less, as you pointed out with like that one, property manager. Like they don't care, right? Like it's just they don't understand where the money came from or who the people they are that they're serving, and whatever. I mean, that's their prerogative, right? And I think for the rest of us who, hold ourselves to a higher standard, then I sleep better at night, and I'm sure you do too. So,
which is most important. That's the most important thing, man, for sure.
Yeah, cool. All right, Tyler, good catching up, man. You take care.
You too. Thanks for the opportunity, man. Appreciate it. Aloha.
You're welcome.